Coming up on the SBS On The Money podcast, the Treasurer approves a deal between Virgin Australia and Qatar. Qantas posts a bumper half-year profit and coal sales surge. We'll tell you more next. Hi everyone, it's your daily 10-minute business and finance news wrap for this Thursday, the 27th of February 2025. Today, with the Australian share market rose by about 1/3% on the S&P ASX 200. Henry Jennings from Market Today will tell us more in a few moments. But first, Qantas has posted a $1.4 billion half-year underlying profit. That's a rise of 11% and is paying $350 million in dividends to its shareholders. It comes as the Treasurer approves Qatar Airways' 25% purchase of Virgin Australia, which will mean Virgin will be able to use Qatar aircraft to help it commence 28 weekly services between some Australian cities and Doha. For more, Alxandra Jones spoke with Ellis Taylor, an aviation analyst at Cirium.
This is a deal that probably was, it's been a long time in the making, but it was always going to come through. Really, it's something that from a consumer perspective means that there's going to be more seats going in and out of Australia, and particularly connecting through to Europe, North America, Africa, and some of those really big markets. So it was always going to be a really hard deal to give up. It also really strengthens Virgin in the domestic market as well, because they'll get access to cheaper funding, potentially to more aircraft through Qatar Airways. And really sort of gives them a bit more firepower to go after the likes of Qantas in the domestic market, and also expand back into the international market that they were doing previously.
So all in all, would you say that it is a good deal?
Yeah, I think definitely it is a good deal. Now, where some people may criticize it is that Qatar Airways is kind of using, I guess, a flag of convenience with Virgin Australia to increase their seats to Australia. And that's kind of been brought about by a situation where previously it's been seeking more seats, and the Albanese government has denied that a couple of times now. But, you know, the upshot is that overall consumers get access to more seats, and that tends to drive down pricing. It also means that longer term, it helps to secure more jobs with Virgin Australia. And over time, we'll probably see Virgin Australia sort of re-emerge in its own right back onto some of those long haul markets. And again, that's a really good thing for consumers.
So those cheaper airfares, I think everybody wants to know about when we can expect.
Yeah, well, the flights are starting from June, and the tickets are already on sale there now. So effectively, it's kind of a doubling of flights between Qatar and Australia. And a lot of that will really have an impact on people who are going to Europe, particularly to places outside of the big centers of, say, London, Frankfurt, and Paris, because Qatar Airways has a bigger network that goes sort of deeper into Europe there. So I think in the next sort of 6 months, we'll start to see that really flow through. The upshot is that as we get towards the peak Christmas periods, it really should show that tickets will sort of temper a little bit from where they have been. The only drag on that is that globally, the aviation industry is really facing a lot of challenges around getting spare parts, getting new seats, and keeping aircraft flying longer. And so that's going to have a bit of a braking impact. It's not going to lead to as many seats being available, perhaps by some of the other airlines that are coming into Australia. But for now, the good news is that additional supply should really start to impact prices in the next couple of months for travel, particularly in that second half of the year.
So I think you sort of highlighting that there, that Virgin, was or has been tipped to return to the ASX. Does today's announcement increase the chances of an IPO relisting?
In some ways, yes, it does. I mean, it really gives Bain Capital somebody that they're handing over, I guess, a large part of the reins to, whilst it's only a minority shareholding. It's a big selling point for when Virgin does relist, that there's a cornerstone investor there who knows aviation and knows the global aviation market really well, and that can provide things like access to aircraft, access to expertise, and even things like joint sales and marketing ability. So it really, I guess, sort of sets the clock running on that. It's also, we don't know what the price of the 25% stake is, but it will sort of set a benchmark for what the valuation of Virgin is when it goes to the markets. And I think that's a real sort of upshot for Bain. We know that they've come in, they've managed to take a lot of the debt from the buyout and put it on the carrier, and that's being serviced. We know that Bain seems to be doing quite well, and they're set for a good payday when they list. My gut feel is that probably within the next year or so, we'll start to see a bit more movement on that front. Now that they've got sort of some data points to sort of say, well, here's Virgin's worth, but also here's its growth path going forward. And it's not just going to be sit there and get taken apart by the Qantas group because it's got some stronger backing behind it. That's a real better sell to retail and institutional investors.
The news today, Qantas posting a pretty hefty profit and declaring its first dividend in 6 years. Does that indicate that new management is turning Qantas around?
Yeah, I mean, the Qantas has been on a very strong trajectory over the last few years, and effectively now they have an embarrassment of riches of having sort of too much cash now. And to be fair, that is something that has been set up under previous CEO Alan Joyce, and Vanessa Hudson is reaping the rewards of that. I think what we are starting to see is there's a bit of a reset in the public perception around Qantas. There was a lot of frustration post-COVID around delayed flights and last minute cancellations and those kind of things. And really, I think they've tried to take the shine away from the upside of some of that, of these record stellar profits that they're having, and really sort of gone to pains to show that they're actually getting things right, that they're getting refurbishments of some of their aircraft, that they're keeping the schedule tight so that if a plane does go technical or has an issue, they can quickly bring another one in. So really, but they are in a very strong position. They've managed to get a lot of debt out of the company. They've managed to trim back the workforce and are really quite well set up for the next little while. What they are missing, of course, is some newer aircraft, and we're starting to see those roll in, albeit not quite as quickly as they would have liked. And that's causing, a few little headaches here and there.
That's Alxandra Jones there speaking with Ellis Taylor from Cirium. Now, Market Day on the SBS On The Money podcast. The Australian share market rose today. The S&P ASX 200 up 1/3%. For more, I spoke with Marcus. No, I didn't. It was Henry Jennings from Marcus today. Henry, the market's a little stronger today. What's driving sentiment?
Well, I guess one of the big things that's driving sentiment has been the Nvidia results, which Wall Street was anticipating eagerly, to say the least. And they came in, I wouldn't say spectacularly fantastic, but they didn't come in either spectacularly bad, and pretty much bang in line, if not a little bit of a beat in places. So that helped, I guess, the sentiment in the US, which has fed through into our market. And we have had such a big fall in our market in February on reporting season that it was inevitable at some stage that we would get a little bit of a rally. The lower Aussie dollar may be helping there as well. So good to see today. It's hardly stunning, though. We're only up around 20 or 30 points, but I think we'll take that at the moment.
Given all this focus on technology recently and the fact that tech shares are what really drove the market in recent times, right? This profit result from Nvidia in the US overnight, does it justify all the hype we've seen with AI?
Well, certainly, the companies that are selling the picks and shovels really are doing exceptionally well. The hyperscalers, they're called, the big tech companies are buying any kind of product they can get their hands on, and it's just walking off the shelves. So as far as Nvidia goes, that's very, very good news. The question mark, I guess, still remains for the market is how the big guys monetize this massive, massive investment. I think there's about $300 billion of investment US going into AI chips and that sector this year from the big sort of 4 or 5 alone. So it's really a justification of whether we see that monetization of the big AI push coming through. For Nvidia, it's great news because their customers, their big customers, just can't get enough of their product. That's for sure.
Okay, here we got some big profit numbers. I want to go through two if we can. First of all, Qantas,
Sure.
a $1.3 billion underlying half-year profit. First dividend since the pandemic. What do you make of it?
Well, it was a pretty strong result, I guess, and it shows the leadership they have, especially in domestic, with Jetstar doing very well, new airplanes putting on, and extra capacity driving the growth there. Good to see the dividend back. Excuse me. And also, it's good to see that special dividend as well, which I guess is interesting given that we've previously seen buybacks, which are a little bit more flexible in that you can suspend them. So paying out a special dividend does show a certain amount of confidence in the future And the stock has rallied considerably this year since the departure of Alan Joyce and Vanessa Hudson took over. So ticks in lots of boxes for Qantas.
At the same time, the Treasurer this morning also approving Qatar Airways' 25% stake of Virgin. Do you think this at all increases the chance of a Virgin Australia listing on the ASX?
It probably doesn't do much for a listing. They've already got that investment now with Qatar coming in. So maybe that sort of delays that Virgin listing to some extent. But I don't think the market's really looking at that. It's more focused on competition against Qantas, especially in the international space.
The other result is Coles, boosted by industrial action at Woolies last year. How do the two supermarket giants compare?
Well, I guess Coles is very much making hay while the sun shines at the moment in terms of taking it to Woolies. And the two majors do tend to take it in turns, I guess, to be one on top or one underneath. And at the moment, Coles very much in the ascendancy. Interesting to see as well, the liquor was slowing down a little bit. Supermarkets, though, doing very well and certainly taking every advantage they can with that strike action that we saw earlier this year with Woolies. So a pretty good result from Coles. The market does seem to like it. There's a growing sort of bifurcation, I guess, if you like, between Woolies and Coles at the moment, which at some stage will reverse. But for the time being, Coles is number one and Woolies is very much number two.
And finally, where do you see the opportunities for investors at the moment?
Well, I guess it's a very uncertain landscape, to be honest. You know, we've got an ever-changing world happening at the moment coming from the US. So that is making life a little difficult for investors. I guess, you know, you've really got to concentrate, having been through reporting season, and focus on the companies that have reported strong earnings and strong outlook. And as they say, follow the money is really going to be the key to it, because they are going to do well. Those that disappointed and have been underperforming and have been hit hard, you know, there's no point in trying to pick the bottom, I think, of those for the time being. I think you just have to follow the money and stick with the strength and stick with the names that have done exceptionally well this reporting season.
It's Henry Jennings there from Marcus Today. Don't forget, if you enjoy the podcast, to give it a rating on Spotify or Apple Podcasts and to click subscribe. This SBS On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It is not personal advice and it does not consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.